The volatile exchange rate is definitely one of the new central bank boss's priorities. Eben was in the Harare city streets earlier today to find out really how upward movement of the exchange rate has been affecting prices of basic commodities and ultimately consumers. We get more in the following report.
Now, prices of basic commodities have skyrocketed in recent weeks, making the cost of living unbearable for many of Zimbabwe's citizens.
Mitengo iri kudhura zvinhu zviri kukwira every day saka price achona tiri kutoona kuti hatisi kutombakwanisa izvo zvandatopinda ndichiexpecta kuti ndikutenga ndatotadza kutozvitenga.
Mitengo iri kuita ichikwira zvinhu zviri kudhura mumashops umu.
Zimbabwe's annual inflation reached 55.3% in March from 47.6% in February, driven by an increase in the prices of food and non-alcoholic beverages, according to Zimbabwe's official statistics agency. Now, ahead of the Easter holidays, the situation remains unabated. Now, on the interbank market today, the Zimbabwe dollar is fetching 22,000 Zimbabwe dollars. In the retail outlets, it's fetching 24,000. Now, on the black market, the parallel market, that's where the Zimbabwe dollar is fetching a whopping 35,000 Zimbabwe dollars. At the core of Zimbabwe's inflationary pressures is a currency that has depreciated by more than 200% on Zimbabwe's formal interbank market since the start of this year. And then there is a thriving parallel market which is characterized by multiple exchange rates. A growth in money supply has also added to the complexity of Zimbabwe's pricing wars.
Zvakaipa zvekuita machange manje zvekukwidza marate but haisi mhosva yavo ivavo vari kuvapa mari ndo vari kukonzesa because vanobva kuti energy rate iri pa3500 vanobva kuti kana kuti iye apuwa ne40 anenge achidawo profit ndo panouya rate yakakwira pamusika.
I think what has been driving the exchange rate is an expansionary fiscal policy that the government has undertaken, and this has been caused by expanding the roads, that is, as we have been noticing. And because of that, there is more broad money in circulation.
The country's monetary policy has for the past 15 years been published by the central bank by the end of February, but till the end of March, the 2024 policy is yet to be unveiled. The coming in of a new central bank governor, Dr. John Mushayevanu, effective the 1st of April, is expected to quench the policy expectations and address the twin devils of inflation and currency instability. Will this year's Good Friday live up to its billing, or it will prove to be a bad Friday because of the escalating prices? Eben Mabunda for ZTN Prime.
We now cross over to ZTN Prime Head of Business, Andy Hodges, to discuss the issue further. Good evening, Andy. Now, the situation seems to have worsened in the past few days, with the gap between official rate and the black market rate widening further. Why are the prices going up?
In fact, monetary policy, the monetary authorities, the Treasury and the Reserve Bank of Zimbabwe thought they'd actually got the gap between the official and the parallel rate down to around 20%. That was last week. It's amazing what a week does in the world of economics. Today, of course, the parallel market exchange rate is trading at between 38,000 to 40,000 to one United States dollar. If you compare it to last week, it was trading at 25,000. Now, why is the million-dollar question? Why is it trading that way? Well, looking at experience, it normally means that somehow or somewhere there was an influx of Zimbabwe dollars into the market, because again, it's about supply and demand. And right now, there's huge demand for US dollars, but very little supply. So you're going to see that exchange rate continue depreciating. In fact, pressure is on it. And it's very clear that something needs to be done. I'll repeat it again, and I'll say this over and over again. The exchange rate is the #1 policy issue that the Zimbabwean government needs to deal with. And we need to deal with it right now.
Right, Andy, and as the country awaits the monetary policy, what could be the short-term solution to this?
Normally, the monetary policy statement comes out in February every year. Of course, it hasn't come out in February, and indications are it may come out in the first week of April. One of the reasons given is the new governor who starts his term on the 1st of April, obviously replacing the old governor who's moved to Mavimba Investment House. But the issue is simple. We need to make sure that we can manage the exchange rate, we can eliminate the parallel market rate. We need to have only one rate trading in Zimbabwe. What can be done? Well, simply put, I think they need to have access to currency much easier, particularly for individuals. Because remember, it is individuals that are forced to use a parallel market rate, because where else can they find currency? And of course, it's the large corporates or large businesses that have huge ZIM dollars who are also going onto the markets that is driving the price up. So we have what I can call a perfect storm. We've got a lot of ZIM dollars chasing few US dollars. We've got the depreciating exchange rate that has an impact on prices, which of course has an impact on inflation. That is the treadmill that we're in. Something needs to be done to break that, and we're all waiting for the monetary policy statement to have a look at that.
Konapo, ipapo pa ZTN Prime, DSTV channel 294, the place to be.